The following is a presentation of TFNN, The Trader's Edge, with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters out there. Welcome to The Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me. Folks, I absolutely love being here with you. Hopefully you're off to a terrific start of your Tuesday. It is terrific Tuesday out there. And if you're not, just change it in the snap of a fingers. Change it in a heartbeat. Now, folks, futures relatively flat this morning. You got the Dow futures trading up about 14 points. ES Mini, even Steven, trading out at 1273. Right now, you've got the NASDAQ futures up a point and a quarter at 2470. Russell 2000 futures off a point right now. King dollar up 23 ticks. Gold up a buck. Trade out at 16.15. Silver up 25 cents out at 28.24. Over in Asia last night, they were up across the board. You had the Shanghai. When I say across the board, it's not exactly like they were doing the long board on their surfing venture. The Shanghai was up 3 points. The Hang Seng up 73 points, folks. That's an index that closed out at 18,259, so up less than 0.4% out there. You had the Hang Seng was up 73 points. The Nikkei was up 86 points. Our call number is 877-927-6648. And if you're listening to us on the radio, we absolutely appreciate that. You can always catch the archive of this show on Channel 9. Just go to TigerTV. And if you are near a computer, maybe near your mobile device, you can always watch us on TigerTV. Just simply watch us live. You can put it on your device. Just simply go to the homepage at tfnn.com. And over on the right-hand side, you'll see an area. Just click on that, and you can bookmark this spot. And then we're always just one click away. So we take a look at the markets, take a look at anything else that you want. I think today what we'll do is a couple of things. We'll go ahead and spend some time taking a look at the sectors inside the S&P 500. I'm going to take a look at what I do have up on my screen here right now happens to be the monthly chart of the New York Stock Exchange. Now, if you don't know, most of you may know by now that I've produced a free report, which you can get at the homepage of tfnn.com. Doesn't cost you anything, and 73 years worth of information this is one of those must things. You absolutely have to have this report. You want to be able to understand it. I've got I took 73 years and combined it into 4 or 5 pages of charts for you to be able to take a look at. I'm going to show you a version of that because that was really the Dow study. What we're going to take a look at here is take a look at the New York Stock Exchange, take a look at the S&P 500. And what I realize out there is the majority of people that are listening, when I say majority, it's 70% of households have 401ks and IRAs, whether it's through their employer, whether it's self-directed funds, whatever it is. So there's 70% of the people. Take a look at my kids. They go to work for good companies, and during that first 90 days, they're bringing home information and saying, "Which box do I check here, Dad?" And so that's what most folks are doing. And then that question is, you check that box, you go to work, and you're relying upon those funds for your retirement funds. Well, and the question is always, because you're so busy working for a living, understanding the markets, even when we talk about things like swing points and ABCD patterns, or retracements or expansion, confuses the heck out of most folks, although you really do want to understand those things. So what I've really done here is simplified the decision-making process so that anyone, doesn't matter what your technical skill is, these are lagging indicators, but they're great lagging indicators. Why? Because they're going to keep you in a market that is trending higher. You're going to catch the big moves. You're not going to be able to go ahead and buy at the low and sell at the high. But what you're going to have, folks, is you're going to have one heck of a meaty sandwich. And that's really what it's all about. There are time periods where you get jostled around. So you get jostled around. That's okay, because you want to make sure that you miss the big moves down. And you obviously want to be able to catch the large moves up. And so what I've got up on my screen here, it's easier to show on a monthly chart. And monthly chart, are going to show you the longer term trends. So for those folks that are making, their decisions on their boxes, you could be a more active trader. We know that we've got listeners that listen in all the time and, are more active traders, and they're going in and out of their funds. And those are the folks that are certainly listening to AB equals CD, patterns, retracement, things of that sort. But for the 70% or so or more of others out there, what I really want to be able to do is impact your life and help you to become a better person when it comes to managing your finances. Because really, it's all about all of us, I know one thing that we each have in common. We are always striving to become better. I do it each day. I know you do it each day. I always suggest that you read books. Go back and listen to archives of, we've got great contributors around here today. Is another example of that. You got Kate Stalter following the Money Master show that Tom and I do from 10 to 11. You got Kate Stalter from 11 to 12. She's got a great service called Small Cap Roundup. Then we've got Victor Jones from 12 to 1, commercial free, uninterrupted. And so if you want to learn about options, then that is the show to turn in. We go all the way out to the West Coast for Ken Shreve from 3 to 4, and then Tom from 4 to 6. So you got great information out there that you can glean. That can certainly be part of your bookshelf. One of the papers that you want to absolutely have, and go to the homepage at tfnn.com, is this report here. I call it Success is a Numbers Game, because to me, it's really all about probability. It is all about a numbers game. So, and when I'm using the tools out here, you'll notice in the newsletter, in the special report, it really gets right to the point. It just summarizes the information of all the work that I did. I tried to really summarize those pages so that people could take a look at it and really understand and say, this isn't really Steve Rhodes' opinion. This isn't somebody else's opinion. I can see where if I had managed my funds this way, I would have more, and I would be able to rely more upon myself to make the decisions with regard to getting in and out of the market. And to me, that's what it's all about. It's all about and it's really all about life experiences. Think about it like this, folks. Life is just full of experiences. But how much time do you actually spend time reflecting? Because, if you don't reflect, you're going to lose the lessons of those life experiences. So think about it. You can do it on a daily basis. You can do it on a weekly basis, a monthly basis. We do it. We all, as a society, seem to do it once a year, right? When it comes to New Year's Eve, maybe we do a little bit of reflection of, I should have done that. I should have done this. And I'm going to go ahead and make a New Year's resolution. Well, folks, you can make resolutions any day of the week. It's just simply all about being resolute, about saying, I'm going to take charge. And so I want you to be able to take charge. I want you to be able to take charge of your finances. I want you to understand just a very easy principle. These are nothing more than moving averages out here. Now, I happen to have the charting tool, so it becomes very easy to pop this up on the screen or to manage this. And, it's the 50 and the 200-day exponential moving average. I don't do anything simple in life. That's not really true. The report that I put together is relatively simple to understand. And so it's all about moving averages here. And so we take a look at the 50-day, and when I talk in 50-day, if I'm using a monthly chart, I can't use a daily moving average. I have to convert that to a monthly moving average. So even if you wrote down on a piece of paper 50-day and 200-day, I'm going to give you the formula so you've got it. It says no great science here. It's a matter of being able to go back and understand when to pull the trigger. So if you had a 50-day and a 200-day, and you were going to look at a weekly chart, well, if there's 5 trading sessions in a week, folks, you would take a 50-day if you wanted a weekly moving chart. 50 divided by 5 is going to give you 10 weeks, right? 50 divided by 5, you've got 10. 200 divided by 5 is going to give you 40. Okay, so that takes us down to the weekly, but we're using a monthly here. So you're saying, Steve, why are you confusing me? Just trying to give you the math here so that you can follow through it. So in a month, you can say, well, there's 30 days. There's not 30 trading days, but if there's 5 trading days in a week, and you have 52 weeks worth of trading, what's that give you? 260, right? So you could take you take your 50-day moving average, divide it by 260, and that would go ahead and that would give you what your monthly number should be. Well, folks, what you want to really, but you wouldn't do that because you got to divide 260 by 12, right, in order to get the monthly number. Now, you can use it like that, or what you could say is 260 total trading days, but the market is closed 9 days of the year. So you can either use 260 or what you can use is 251. I say might as well go ahead and be as accurate as you can. So take 251, divide that by 12. That's going to give you a number. It's going to give you a number like 21.66. So that's how many trading sessions on average there are in a month. So now we're going to take our 50 days, divide it by 21.6. That's going to give you your number that you would plug in on your chart. If your chart program allows you to go ahead and do that and be accurate. That's going to give you a number 2.3 and a bunch of digits off to the side. Again, if you take a 200-day moving average and you divide it by 21.66667, that's going to give you 9.23 and so on. So there's the formula, but it's not so much the formula. It's a matter of being able to take a look at a chart just like you have here on the New York Stock Exchange, which you can see right now. We're in the month of June, and really forget about the calculations. Just simply look at the lines that are out here, because when you go and you click on the report, the free report at the homepage of TFNN.com, what you're going to see is going back to 1928 in the Dow. So you've got 73 years worth of information. You're going to be able to follow follow the red line and the blue line. That's all it is. This is the game. This is the indicator. This is the easy way to be able to manage your long-term funds out there, folks. And what you're going to do, if you just take a look right here, the most recent time period, going back to December 2007. December 2007, you would have gotten the signal. You would not have gotten out at the exact high, but look where you would have gotten out of the market in the New York Stock Exchange. You would have been in the 9750, 9800 range. And you would have been out of the market. You would have not have dealt with the pain and agony that 70% of you, or more, quite frankly, it's actually more, dealt with during that entire move down. You would have missed that move down just by using this exponential moving average indicator. Now, you would not have gotten out, and you'd not gotten back in the market in March of 2009. But had you been listening to the show, and had you heard me or Tom or Larry or whoever else saying, okay, this is where we're at, our backs are up against the wall and there's going to be a market turn, I guarantee if you had missed most of that ride down, you might have been inclined to go ahead and put some of your money at risk there. But where you could have gone in just simply by following this indicator, you would have gotten right in here, right inside the July 2009 time frame. You would have ridden the market up from July 2009 into the May 2010 area. You would have been out for a few months, back in catching the move. You would have been out in July 2011. You would have gotten back in here in January 2012. Folks, you would be out of the market right now with your long-term funds. This is the New York Stock Exchange, so this is the breadth of the market. If you're only holding a few stocks, you can use the same principle on those stocks as well. 877-927-6648. It's all about life experiences, folks, and I'm loving our life experience together. We'll be right back.
Yeah, it's always better when we're together.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of tfnn.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at tfnn.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back, 877-927-6648. So let's go take a look at the small cap index, the Russell 2000, and we're going to take a look at that on the screen. We're going to use that same monthly indicator. And so if we just simply come back here to 1990, you would have had this cross-through occur during the month of July 1990. You would have been out of the market. You would have gotten out at about the 163 price point. That was after the market dropped all the way down to 129. Think about that. 163 minus 130, so that's 30. That's a 20% drop in price. Do you want to sit through 20% drops? You don't, folks. And where you would have gotten back into the market, well, maybe you do. I don't want you to sit through those. And if you would have gotten back in, if you're just simply trading the small cap index, you would have gotten back in the month of January 1991, right around the 138 price point. So you would have gotten out at the 160 price point. You would have gotten back in. You would have had a lot more confidence. You know, yesterday I talked about confidence in the word confide, and I used I digressed back to my big fat Greek wedding. Not mine personally, but the movie out there. I'm not going to do that again for you today. But you would have been back in 1991. Now look, you would have caught the large move up just simply by using this and being able to manage your 401k amount. Your long term. We can use this for a number of different things, but for most of you out there, where it is really that nest egg, it's about being able to protect that nest egg, folks. And so that's what we're taking a look at. You down in here, you might have gotten jostled around just a little bit in the mid 1992. Session, may have gotten in, may have gotten out, but you would have been back in. You would have caught the long-term move up. Take a look at this again. You would have been out of the market here in July 1998. You would have missed that large move down. You would have been out maybe about 443. How would you have felt when the market had moved down to about 303 points, folks? Yeah, you would have felt pretty good about being out of that market. So on the commercial that we had put together that just played and aired during the during that first break, we put together that commercial on Thursday. Well, on Thursday, we were close. The market was close. And when I talk about the market, in this case here, was really looking at the S&P 500. The Dow was, maybe days away. Well, Friday's action didn't take us days away. Friday's action actually went ahead and confirmed and put these markets on a monthly basis into long-term sell signals, cash signals. So, you want to be able to understand this. Again, go to the homepage at tfnn.com. Can't implore you enough to go do that and understand what 73 years worth of information gives you. And it is about life experiences, and I want you to be able to experience being able to manage your money in a way that you never have. So let's take a quick peek at the markets out here. Let's take a look at the index futures. You've got A, B, C, D patterns being made all over the place, and most of those are A, B, C downs. But if you take a look at intraday charts, markets breathe. They don't just go up and down. If you take a look at the NASDAQ futures contract here, and you take a look at the low that was put in, let's see here. Is the low about 730 on June 3rd. So as we came in and opened up on Sunday, you had the A point of an A to B equals CD up. That was put in at the low of 24.34 even Steven. That was your A point. Your B point you can see all the way up here at 9.40 yesterday as the futures moved up into the 24.80 price range. What do the futures do? They move back post-haste. They did that at 10.10, pulled down into the 24.43 range, making a 1-to-1 A to B equals CD up pattern. Let's see here. Didn't quite get all the way up there. Let me refresh the screen here and make sure of that. Didn't get quite all the way up there, but they got really darn close. And now what you have going on is you had an A, B, C, D down. If you take a look at that, that's coming here at 2:10 in the morning. This morning, June the 5th, you had looks like maybe a bearish engulfer. But let's just take a look at the pattern out here. You got an A point that was at 210, the high there being 24.8450. Your B point came in at 3:40 in the morning. If you were up, that came in at a low at 24.69. You then got up at 4:10 a.m. The market got up to a price point of 24.78, makes a 1 to 1.272, A to B equals CD, down at the price point of 24.59. A, B, C, D patterns all over the place. The NASDAQ futures on the 10-minute chart making the next A to B equals CD pattern. Well, if it does, folks, the A point at 24.5950, B point coming in here at 8:40 this morning at the 24.77 level. It's possible right now that it's made at C point. If it is, then you'd see the NASDAQ futures trade up to 24.83. Market doesn't have a tremendous amount of direction right now. Maybe the market is just reflecting, just like you should, on all your life experiences. Gather up the past, folks, and invest in your future. 877-927-6648. We get back, we'll go see how these markets are going to open. We'll be right back.
Look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. at less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
To the races. You got the Dow down 12 points. S&P's off 2. Composite off 5. Russell 2000 down 3. Lead the charge 4/10 of the way down is the Russell 2000. Big race coming up this weekend, I believe. Isn't this the is this the Belmont? Is this the for the Triple Crown coming up this weekend? What's the name of that horse? I'm not a horse guy, so was it One More Time or I'll Have Another? I'll Have Another, I think. I have said that before. And so if we take a look at I'll Have Another, let's just see what's going ahead and what's popping and what's dropping out here in the markets. Leading the charge percentage and dollar-wise on the way up, you got Westport Innovations. WPRT is the ticker symbol. They are up 12% this morning just on the announce of Westport and Caterpillar announcing an agreement to develop some natural gas technology. You've got United National Foods, UNFI. They're next up in line, up $1.81. That's 3.6%. Let's see if there's anything in here, reason why they are up. They did have earnings release, so let's see here. What did they do? Net sales of $1.4 billion versus $1.2. Net income of $29 million versus $23.4. So that is what is behind the 4% move in United National Foods. You've got Baidu up next. They are up $1 right now. That's 0.7%. Amazon right behind them. Of course, that can't be right. I'm showing them being down a penny. Goldman Sachs up $1, up 1%. You've got Caterpillar up 80 cents. UAL, United Continental Holdings, they're up 2.6%. Amlin Pharmaceuticals, AMLN, they're up 2% as well. SanDisk rounding things out, up about 63 cents right now. Leading the charge to the downside, Grainger, GWW. They're off $8. Boy, they're getting hit this morning. We'll go take a look at them, see where they're headed to. I'm sure we're going to be able to find a high-volume bar somewhere on the Grainger report. Fastenal, FAST, the ticker symbol, they're down 5% this morning, off $2.40. Akamai Technologies, AKAM, off 7% this morning. Dollar General off 2.5%, off $1.24. Kinder Morgan, KMP, the ticker symbol, off $1.40. That's down about 1.8%. Starbucks taking a little breather here, off 2.5%. Green Mountain Coffee down 4%. And Salesforce Innovation rounding things out, down $1.21, down 0.9%. Well, I won't say rounding things off. There is a stock here called Carol's Restaurant. Where is it? TAST. TAST is the ticker symbol, and they are down 11% this morning. Let's go. I don't see anything in the news. Now, what I do, I'll go take a look at some of those stocks here. Anything else that you'd like, you can always give us a call, 877-927-6648. Now, I've got the dollar index, King Dollar chart up on my screen. Trading out right now at 82.83. That's up 18 ticks. from the close yesterday. Now, what you can see on the 10-minute chart, you can see a high-volume downdraft bar from 940 on June the 1st, on Friday. And that had 5,600 contracts. You can see as the king was trying to move its way up, that's what it was running into. It was running into that little supply line, pretty much stopped it dead in its tracks. And if we take a look at King Dollar on a daily basis, window, tile, vertical, what we did have on the daily chart is we had a as the dollar was making a 1.272 butterfly. I don't have the pattern drawn in here, but what I do know, it is a butterfly. It was a combination of patterns. You had a butterfly sell pattern on the weekly chart. You had a test of a swing point going back to the August 2010 time frame. You have a bearish engulfing candle that appears here on Friday, June 1st. You then have confirmation with a move lower. Yesterday, of course, the last time I saw this same pattern, the king rejected it with the exact same scenario. When was that? Well, that's right back here, folks. That is the May 18th time frame. May 18th, you had a bearish engulfing candle. You had follow through the next day, and boom, the king took off from there. So we'll see what we know what King Dollar is trying to do. If you take a look at the daily chart, that allows us to go ahead and dive down, dig down, and see what it's doing. And so when we see that 10-minute chart, we see that the king is running right up into a supply line, wants to continue its pullback. Where would the dollar index pull back to? Well, you got a couple different ways that you can measure it. One, you can take a look at just the normal retracement areas. The normal retracement off of any leg you'd be looking at here, in this case here on King Dollar, you'd be going from the lows as it came into the May 1st time frame, those lows being 78.67, the highs being the 83.67 from Friday. The 0.382, folks, gets you to 81.76. You're at 82.86 right now. It may not be today, but that is what King Dollar is trying to do. Of course, it needs cooperation from its queen, the queen being the euro. Euro doing really the same pattern, and that is making a bullish engulfing candle on June 1st, on Friday, getting follow through yesterday. Today, just kind of agitating a little bit. Now, what you can see about the euro is the euro did what it's supposed to do. And what I mean by that, folks, if you take a look at the leg down, the last leg down in the euro, that would be off of the highs for May 21st. That high out there, 1.28232, all the way down to the lows that were put in on Friday. And you just, well, actually, I don't think I measured that properly. Give me a moment here. I want to make sure I give you the right stuff. Hate to give you the wrong information. So let's go see exactly what the euro is doing. From those highs down to the lows. Yeah, okay, so I was right. You got the euro trading at that 0.382 area. You see, that's the normal bounce that you're going to first get when you're trading anything. You want to become a master of understanding these retracements, these expansions, these contractions. Why? Because then you can expect what the market is going to do. In this case here, you had the euro trade up to that level being 1.24916. The euro actually closing out the session yesterday at 1.24981. And so when you get up there, you're going to let some folks off the elevator. You're going to go ahead and pull back. That's exactly what the euro is doing here right now as it makes its way up into the 0.618 area. That would be the 1.261, looks like about 182 range. That would be the 0.6. Now, that's just simply the 0.618, the 0.382s of the last leg down, not of this entire 1.272 butterfly buy pattern that was out there. What you would normally expect is at least a bounce to the 0.382 level. That 0.382 level, you got to love how this works here. That 0.382 level takes you to the 127 and change area. Well, what do you also have up there? You've got the 0.786 retracement of that last leg down that we were taking a look at. So you like when you have some synergy. That's where it looks like the euro wants to bounce to if it can get out of its own way. Take a quick peek at the what's going on around the world here, and then we'll go take a look at the daily charts. What popped up on my screen here first happens to be the Nikkei. Again, the Nikkei was up 86 points last night, trading out at 83.82. The Nikkei wants to at least get down to the lows of November 25th. That would be 81.3579. The way that the Nikkei has traded, the way that our markets have pulled back, which has not been that substantial when you take and compare our markets to some other markets around the world, what it looks like to me is the Nikkei wants to trade much lower than that November 25th area. That's on the Nikkei. Let's go see what's going on over in Germany. They're taking another holiday. Over in the UK, If we take a look at the DAX continuing its A to B equals CD down after it broke that longer-term uptrend channel. The DAX headed to 57.53 as its next stop. Traded out right now at 59.46. Let's go. Let's see. What do we want to take a look at next? Well, let's go take a look at some of those stocks that were popping and dropping. As soon as I clean my art pad here right now. Close all. Okay, so let's go take a look at, I want to take a look at that first stock that was down. Okay, Carol's Restaurant, Taste, T-A-S-T. So let's put that up on the screen, T-A-S-T. Maybe I don't want to really look at the stock. Looks like, let me see here. They're trading out at $5. And gapping down. This is pretty incredible if this is real. Guess this is real. So take a look. Let's put this on a weekly basis. This stock, folks, I'm going to have to go take a look and see who they are and what they do. They closed out their session here May 7th out at $15, $15.08. They opened up the next day, May 8th, at $4.36. You talk about haircuts. Holy shamoly. And look where that thing comes down to. How does it do that, folks? Why do you want to understand where volume is on any chart that you're trading? Look at this. The last high volume bar out there is June 25th, 2009. The low, 523, did 103,000 shares. Now, that's on this. That happens to be on this stock chart here. But notice how it came back to that area, an area with the volume. And I don't know what these guys do. I know what they don't do right now. This stock chart is absolutely damaged. And this was a IPO going back to December in 2006, and you had a lot of folks buying in at the $15 mark. What does it do? It makes a move, getting all the way back into the April 2012 timeframe, and then holy shamoly, all the way down to the bottom. That was on Taste, T-A-S-T. So let's go take a look at some of the other more popular stocks out there. Let's look at Grainger, GWW, see what Grainger is doing out there. Other than leading the charge on the way down this morning dollar-wise. GWW trading off 4% this morning, currently trading at 180.15. So they have a gap down, and they have some decent volume at the open because we're only 15 minutes into the trading session. Today already doing 213,000 shares, taking out a B point. That B point is for May 18th. So Grainger now in a confirmed A to B equals CD down, and that looks like a doozy. So let's go see what that ABCD down projects out here. That ABCD, we're going to go ahead and use the swing point from April 20th, 2012, high of 221 even Steven. One of Basil's round number highs out there. How does that work? Maybe Basil picked up on that one. And, folks, you want to go to the homepage of TFNN.com and sign up for Basil's workshop this coming Friday. It's an all-day online, around-the-world workshop. All the details on the homepage of TFNN.com. The B point on Grainger was the lows for May 18th. Price point 185.73. 180. Let me see here. Let me give you the right number. 185.73. I did give you the right number. And the retracement that it does, folks, shallow, very shallow. And so that says you've got a deep ABC. This is going to go deep into the bench here on Grainger. Today you are confirming an A to B equals CD down. The C point on this happened to be 198.75. That was from May 24th. You take a look at the actual retracement, A to B. What was that B to C? 0.382. Remember how we talked about you're normally going to get a 0.382 bounce? And here this shows that the 0.382 number was 199 and change, and where it actually got up to was 198.75. You got to love how those numbers work. They are absolutely outstanding, just like you. Now, if you take a look at the A to B equals CD that's forming out here, well, the 1-to-1 is 163 and change, but that's not what it's going to do, folks. Coming off of the C point, gapping down through the B point with volume. And now you got to see how the day plays out here. Remember, the B point on this is got 784,000 shares, but already doing today 241,000 shares. It should have enough volume to confirm the A to B equals CD. So where's that going to take it to? Well, most likely it's going to do a 1 to 1.618 A to B equals CD, 141.63, and it's got friends down there. What are the friends? October 4th, 2011. Now, where's the next possible place where this thing might get some friends and some support? Well, I guess you could say it was where it gapped down to this morning. There was a little gap up that this thing had going back to November 30th, 2011 with 956,000 shares. That's what's holding it in place here right now. But this thing is going to go ahead and make an A to B equals CD down, coming all the way back to October 4th. One at a time, we are seeing A, B, C, D patterns out there, and not just possible A, B, C, D patterns, folks, but confirmed A, B equals CD patterns. So that was on Granger. Let's go take a look at Fastenal. I pass those stores every now and then, haven't been inside one. FAST is the ticker symbol. They're trading off this morning, trading down about 6%. They have gapped down. Looks like they, too, want to make an A to B equals CD pattern. So let's go see what kind of juice you've got in Fastenal. At B point, this being May 18th, 2.5 million shares. What have you done so far today? Ouch! Oh, this thing has got an A, B, C, D down, confirmed now. You have done 1.1 million shares in 30, 40, 18 minutes, folks. This thing is Major League confirming an A, B equals CD down. That is on Fastenal. Your A point is all the way up here, March 27, 2012, $55.05. The B point now that I'm going to use on the longer A, B, C, D down is May 18th. Makes sense, 2.5 million low of 41.72. What's it do? It bounces up. I'll bet you will look, and it's actually, this looks like less than a 0.382 retracement. Bounces up into May 29th with 1.8 million shares, and today you are taking out the B point with volume. That means, folks, it's going to do more than a 1 to A to B equals CD. You're looking at 28.73. Fastenal wants to come all the way back to August 2011. So you got another confirmed A to B equals CD. You got the Dow up 7, S&P's up 1, Composite up 5, small caps not even up 60 cents right now. Apple trading up $1.26. Our call number 877-927-6648. We'll be right back, folks.
Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. You've heard Basil Chapman on the air hosting the Tiger Technicians Hour and always wondered what's behind his powerful Chapman wave. Well, Basil has just announced a one-day online master trader course where he'll explain his Chapman wave methodology in detail so that you can learn how to chart Basil's one-of-a-kind formation techniques in real time while the market is open. Not only do you get a full-day online master trader course with Basil during live market hours, but by signing up now, you also get a free month of his newsletter, The Opening Call, a $128 value, along with access to his Moving Averages webinar, another $99 value. This online course takes place Friday, June 8th, and will be archived so you can view it as many times as you like for 30 days following the course. Make sure you take advantage of this one-of-a-kind Master Trader course with Basil Chapman during live market hours by visiting the front page of TFNN.com and reserving your spot today.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. 877-927-6648. Dow up off 6 points right now. Pretty flat market. We've had a relatively flat market the last couple of days here. And so I've got up on my screen here, opened up the show really talking about the 50-day, 200-day exponential moving average and how to go ahead and convert it to a monthly chart. If you're just joining in, go catch the archive of that show. I don't want to go through all of that math that's out there. And what I do have up on the screen here happens to be a chart of Apple, and I've just gone ahead and converted it to a monthly chart. So I want you to understand that it works on, it's all about being able to manage your portfolio. So the question becomes just how detailed do you want to get? Do you want to go, if you just have a few stocks in your portfolio, then you want to be able to use this system on those stocks as opposed to on the general market. It just really depends what your portfolio is looking like, what your options might be when you are taking a look at your retirement funds, your 401k funds, or just simply any type of investments that you have out there, because you have to determine whether or not you want to be able to ride markets down. So, and maybe take a look at tax consequences, things of that sort. But if you take a look at Apple, and we just simply here, I'm back to the 1990 time frame, you can see here the blue line is what is the equivalent of the 50-day on a monthly chart moving average, and the red line the equivalent of the 200-day moving average on the monthly chart. You would have got back into Apple here at the $7 range. Pretty interesting, huh? But $7, I actually remember those days, $7 range. You would have wrote it up. You might have gotten out here at about the $12 range, $10 to $12. But you can see here, you would have, if you utilize this, I'm just going to show you, you're going to catch the big moves, and you're going to miss any big moves downside. In this case here, Apple gave you a signal to go ahead and get out at $8.60. I don't have, let me just put this up on the chart here. Whoops. Let me go ahead and back it up. So here's back in 1995. Gave you a signal, get out at around $9.94. You would have gotten back in maybe about $4 and change. Is that important to you? $9 to $4? My math says that's a 50% haircut. Who wants to sit through a 50% haircut when you can use a longer-term indicator to get in and to get out? Look at this here. You would have gotten back in Apple in that $4 and change range. You would have ridden this thing all the way up. You would have gotten out maybe at about $19. Again, lagging indicator. You would not have gotten out certainly at the highs at $31 here, but you would have gotten out. You would have missed another big move down in Apple. You would have gotten back in on this thing here. Just trying to keep this. You would have gotten back in May of 2003, right in the $8 range. You would have ridden this thing all the way up. Next time you would have been out of Apple would have been at about $137. How about that? You might have been out. You might have gotten out around there. Would have gotten back in at around $115, folks. $115, and at $115, going back into the April 2009 time frame. So you wouldn't have caught the bottom. You would have missed the Gartley buy pattern that was out there. If you took a look at the weekly chart, I'm not going to throw the weekly chart out there. You would have missed a little bit. You would have missed a little bit of the bread. But as Nico will tell you, carbs are bad for you. So you don't have to. If you're focused on trying to catch the bottom tick and buy at the extreme low and sell the top tick, you don't have to do that. You want all of that protein, right? You want all of that meat in your sandwich. The case here in Apple, if you were in Apple, even though it's pulling back, there's no signal here to sell. Now, if you happen to be buying at the $600 range, well, that's a whole different money management strategy that you've got out there. So this tool, folks, go to the homepage of TFNN.com. Go take a look at 73 years worth of history. Don't take my word for it. Go see what using this tool will do for you and see what it did if you took a look at using this for your entire life. And I want you to make sure that your children use this for their entire life. Thanks for joining me, folks. Tom and I will be up next. Gather up the past and invest in your future, folks. We'll be right back.